$5 million in a single payout, with a total of close to 4.5 million in prop firm payouts across his career, may be considered the best ICT trader in the world, Mr. JadeCap effect.
I wasn't even trying to achieve the record payout. When I hit $1 million, I was like, this is really what I wanted. A couple weeks later, now I'm sitting at 2 million. There's two ways that you go about it. You trade extremely conservatively for a very long time, or you don't care about losing the evaluation sign-up fees and just go for it. I think a lot of traders need to understand that proper trading and green P&L comes from, and that's, I think, the defining factor with a lot of successful traders. A lot of traders, they cannot identify what is a high probability versus a low probability condition. They just assume that if I show up to the charts today, it's going to be a high probability condition, right? I think a lot of traders that are scalping, they just can't make a really good decision in that short amount of time. They don't have the ability to actually critically process what's going on in the markets. They're just acting off of emotion a lot of the time.
Is there anything that stands out to you on two sides? One, a very, very common mistake traders are making. But two, is there a common trait or something that really, if traders could understand or overcome, they could make progress?
So the one thing that really stands out to me, in my opinion, and the ones that probably aren't going to make it in this industry are the ones that just...
The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Hey everyone, before we get into this incredible episode, I just want to say a massive thank you because we are still the number one trading podcast in the world and the fastest growing thanks to all of you and, of course, our incredible guests. Without you, we would not have reached these heights when it comes to the level of production and the level of guests that we're getting. When I started, it was simply for the love of podcasting, and I was interviewing my friends who traded. Suddenly, I'm interviewing the biggest influencers in our industry, and next minute I know I'm sat opposite Jack Schwager, the author of Market Wizards, who inspired an entire generation of traders, including myself, when it was a massive inspiration to the podcast. And when I interviewed him, we decided to make the big step to go verified with all of the results of our guests. And then we did a huge US tour in January, where we went around the whole of the US, interviewing the best, brightest, and most committed traders in the world, with $1 billion plus in verified profits and hundreds of years of experience combined. And we're bringing those episodes to you every single week. All I ask is that you hit subscribe, hit like, and share them with your fellow traders so that we can continue to bring you week on week the best traders. Talking of which, today he's no stranger to the podcast, and he is a phenomenal trader and someone I really regard as a future market wizard. JadeCap Effects, aka Kyle, has done incredible feats, millions of dollars in payouts using an actual profitable edge, but trading evaluation firms and prop firms. He has just hit the record with Apex, which is absolutely incredible. And today I'm excited to have that episode for you. Now, with Market Journal, who we are partnered with, a free newsletter every single week, completely free, where they cover stocks, futures, Forex, crypto, so that you don't have to panic, you don't have to worry, you can be calm and collected when trading. Now, as part of this partnership, every single week, we're going to create a PDF and provide it to them to include in their newsletter of the key lessons from every single guest. Sign up once, and every single week, you get that in your inbox. Links in the description. Now let's go hear from Kyle and how to be an elite prop firm trader. Welcome everyone back to the Words of Wisdom podcast, still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. Talking of which, today we have a very, very special emergency episode, if you will. A record has been broken. The all-time payout, one-time payout record with Apex, $2.5 million in a single payout, with a total of close to 4.5 million in prop firm payouts across his career. I think you already know who it is. Maybe considered the best ICT trader in the world at this point.
Maybe.
Mr. JadeCap effect. Well, Mr. JadeCap. I was about to say FX. FX is gone. You moved to futures, man. How are you, man?
I'm good. How are you?
I'm absolutely
Thanks for
amazing.
having me on.
Well, thank you for being here, man. And I'm sure there's loads of people hitting up your line, and I always appreciate that we get to sit down. You're probably actually one of the most reoccurring guests that we've had on the show, which is incredible. But today, huge congratulations to you, Kyle. When we first met a few years ago, this doesn't shock me. It's not really a big shock to me. I'm probably sure it's not a shock to you in a sense as well. But you've always shown professionalism and a professional mindset towards trading, and really, really peak performance when it comes to your trading. But if you had to put it down to like one thing that allowed you to achieve this particular payout, this particular milestone, what would that be?
To me, it's really about emotional balance. I think to be able to get to the uncapped payout window, right? It takes a long time. You have to trade for, I believe, 48 days. Me for 56 because one of the payout windows got denied. That was totally my fault. But to trade for that period of time and go on the streak that I did, it wasn't easy. And there were days where I felt myself going on emotional tilt, but I was able to just kind of rebalance myself, get right back in the process and then come back the next day and follow the rules again. So there were some days where I was breaking rules. I had pretty large P&L swings towards the end. And I think that was just really from more so burning out and just not having that energy to continue trading the accounts at the same level as when I first started. But I think, yeah, having that emotional balance and staying cool, calm, collected throughout the whole process was extremely important because I think, as most traders know, and as the audience probably knows, like trading, when you're in front of the screen and you're trading, sometimes it feels like a lifetime, like an 8-hour day. If you're sitting in front of the screens for 8 hours, sometimes it feels like you've lost years of your life, right? So it's very important to try and keep that emotional balance throughout that period, just so you can, if you're going on tilt, to make sure you cut yourself off quickly, or only focus on taking A-plus setups.
I'm actually glad that you said that because I think a lot of people, when they see these things, they see someone like Kane, see someone like yourself, hitting these huge numbers. It's easy, I think, for the audience to assume that, you just hit green after green after green day, right? But the reality is, and you both did a great job, but I definitely got to see yours firsthand, where you did a great job of just being so transparent and sort of sharing that, this was a down day, or this was a rough day, this was a day where I finished green, but I wasn't happy with my actual performance. And, what is the realistic expectation of a trader who's been doing this over 10 years, has been successful for many, many years, performing one of the best in this side of the industry for sure? What does that reality look like in terms of those tilt moments, having to catch yourself, having to observe your performance, and still, even if you finished like up, I remember there was a day, I think, if I'm not mistaken, where you finished over 6 figures up, but you said, I wasn't happy with this performance.
Yeah, because I was like down 6 figures earlier in the day. The realization is that the game never really gets easier. You just get more comfortable with the swings. You get more comfortable with the emotional volatility, and you get more comfortable with the risk that you're putting on. And that took a long time because, and I've mentioned this before, when I first started trading, and when most traders first start trading, you're putting on $50, $100, $250 in risk, and it's causing like heart palpitations almost, and it's very stressful. And as you level up and as you scale more and more in your trading size, those feelings still come back. So it's not like I've reached the point where I'm just a robot, essentially. And it takes a toll on you at times. So you have to be able to understand that there are cycles in trading. And I'm, just being completely transparent. Last year was not one of my greatest years. I did like, 100K, but the year before that, I had done like 400,000. So it's not even like anywhere close to what it was last year. And it was really, I just was following the same process. It's just, you're going to go on streaks. Like trading is very streaky. And you have to make sure when you're on a cold streak that you have to protect the downside as much as possible, because those are the periods where you're going to end up blowing up. You're going to, go into a really deep emotional drawdown, and it's going to feel like you can't figure this out. And traders that are senior traders, they still go through those periods. When they go into a losing streak, it's like, I've lost my edge. After losses, it feels like you've lost your edge. But I think if you could just reset, and what I did on this run was every single morning, I just kind of took a moment and ran through my game plan of what I was trying to achieve at the end. And I wasn't even trying to achieve the record payout. When I hit $1 million, I was like, this is really what I wanted. A couple weeks later, now I'm sitting at 2 million. It was like, I just came back to the drawing board every single day, ran through my processes, said, this is what I want to do on the specific day. This is my bias. This is how I'm going to manage my risk. Sometimes it went perfectly, like A+. Other days, not so great. And I think, the reality is that there's ups and downs in trading, and it's never going to be perfect. Even the run that I had, when you look at the end of the day P&L, it might be perfect to some people, but for somebody that's always trying to prove, there's never a moment where you're like, I did that perfectly.
No, I love that. And it's interesting to say that, actually. So, 2 years ago, 400K a year. Last year, 100K a year. It's so interesting then that coming into this year, you end up starting, well, basically start of Q2, 2.5 million in one go.
Yeah.
Right. And so we've got the rest of the year to go, which is incredible. And we'll come into sort of like what the future looks like for the rest of the year, for example. But the reason I mentioned that, and I'm thankful that you brought it up, is that, you know, a lot of people assume 400K one year has to be more the next year, right? And if it's not, that's going to be a psychological problem for them. What was your thought process? What was your mindset?
Well, to me, it was a psychological problem. So like when I was going through Q1, Q2, I wasn't doing that great. And now all of a sudden, like the emotions start snowballing and it feels like you've lost your edge entirely.
Was that last year?
Yeah.
Okay,
yeah. So I was, you know, trying to start my, you know, another business up. I was pretty busy, occupied. I just moved down. I was still trying to acclimate to the area. And I don't think I was like in the right headspace. And that, you know, it impacted me a lot. Not only that, because I was,
right?
the industry changed. And then not only that, I was trying to replicate the performance I had the year before. And I was too focused on the performance. So, you know, when I'm posting P&L now, it's just, I've tried to disconnect so much from it and just focus on good trading. And just the P&L is just the result of good trading.
So when you say performance, it was more so you were focused on the result of last year.
Yeah.
Or the previous year, sorry, so 2023.
Yeah, so my processes broke down. My routines broke down. I wasn't following the rules that I had set out in place. And it was just overall, it was just a very sloppy year for me.
So how did you then make the necessary reflections and changes coming into this year?
Honestly, just taking a break. I took a break for like a month, and I usually do anyway. In December, I just took a very nice long break, spent the holidays, you know, traveled a bit, saw family, and just kind of grounded myself a little bit again. I just, you know, thought about the long-term process of trading, and it's all probabilities. It's the law of large numbers. If I just show up and continue to implement my process, my edge every single day, I know that the money's going to come. And my stats and my data say that. Like my win rate at times is not great. Some months it's amazing. Some months I'm doing like 75, 80% win rate. Other months 30, 35%, but I'm still making money. So it's just having the comfortability, taking losses, taking numerous losses. Maybe you're going on a cold streak. Maybe you're going on a week-long losing streak. You know, it's not stopping you from coming back the next week and making it all back.
So interesting. So then the start of this period then, so you come off that break in December. And as part of that break, you were reflecting on the previous year, reflecting on, okay, this is what I need to do. This year there's a lot of different factors. Part of that factor was obviously trying to compare to the previous year and trying to replicate that. But let me reflect. We reflect on the fact that it's all probabilities and process driven and focus there, and then the rest sorts itself out. But plus, obviously, it's a reality that, like this year, you might finish, I don't know, 3.5 million, let's say. But then next year might be 2 million.
Yeah.
So it's a thing that is
it might be under a million.
Let's hope so. I would never doubt it. But yeah, so the start of this process then, coming into this year, when did the Apex sort of journey begin?
So the Apex journey honestly began last year, and I was just trying to get used to the trailing drawdown because it's very, very difficult. Most people can't get past that trailing drawdown limit, and it was just a combination of right place, right time. Like the markets are extremely volatile right now. It's providing a lot of setups. Well, at least the last couple months. Now it feels a little bit choppy to me because we've had so much volatility in Q1, Q2. It's only, it only makes sense to me that the markets might slow down and go sideways a bit and kind of chop everybody up. So it's very important to be able to protect what you've already made so far on the year. But yeah, it's kind of right place, right time. When I passed this current round of Apex accounts, I just found like a really great setup. I didn't even have to put a whole lot of risk behind it, but I got the trailing drawdown to stop on the first day. And everybody was always asking me about, aren't you worried about the consistency rules? To me, I don't really care about the consistency rules because I'm not trying to force a payout date. If I breach the consistency rule, I just keep trading until I'm eligible for a payout. So if you make 5K on the first day, just keep trading it. You can't take a withdrawal until those accounts hit 20K, essentially, because it's like a 30% consistency rule. Yeah. But at that point, when you get to that first payout, now all of a sudden you have how much in your accounts? It's like $400,000 in the Apex accounts if you have 20 accounts. So I was never concerned about, I need to make a payout on this specific date. I didn't care about the consistency rules. I just made sure I was managing my risk appropriately, coming to every single trading day with the same plan in place. I wasn't trading any more than like a couple micros. Some trades I was going a lot heavier in, of course, but that was when I had a really strong feeling of which direction the market was going to go. So there was a lot of dynamic risk involved. Some days I was only trading 3 micros on NASDAQ, which is not a whole lot of risk. It's like $250 to $500, but across 20 accounts, it adds up.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or if Bitcoin drops out of the sky. Market Journal has you covered. Join for free today using the link in the description below. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, back testing, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella. So use WOR for 20% off your yearly subscription, or RIZ10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode. Would you say that that is the case when it comes to overcoming that trailing drawdown? It's just essentially you need to really hit a really good trade to begin with.
Yeah, it's either that, there's 2 ways that you go about it. You trade extremely conservatively for a very long time until you get the trailing drawdown to stop, and then you can start sizing up, or you don't care about losing the evaluation sign-up fees, registration fees, and just, go for it. That's essentially what happened to me. It was a little bit of both. I wasn't like risking a whole lot, but the market just moved 1,000 ticks in the Asian session, nonetheless. So, it's the right place, right time. You have to have a little bit of luck in trading.
Yeah, I think it's an interesting one. It's kind of like there is luck in that sense of things. Like you don't know when the market's going to create this volatility, but equally, it's like you're there to take action, you execute correctly, and that's not luck on that side of things.
Yeah,
right?
you just show up daily with the same mindset.
It's what do they say? I think it's a saying. I might butcher this because it might not exist as well. But it's like when luck meets preparation or something like that, right? And that's a prime example, I think. But talk to us about, you mentioned the dynamic risk sizing there, and sometimes when you felt a bit more confident in the moves, rightly so, like we've had some really great volatility during that period. What would you imagine, let's say, if you were still in that journey right now, maybe the next month still to go till like the ultimate payout, and then you're in these markets right now, do you think there would be some struggle there?
I think not so much, because I had such a massive buffer, and a lot of my trades, even when I got to like $20,000 in profit on each, it was, it ended way past that. I was still only risking like $1,000 to $2,000 per account. So it was like 20K to 40K across all of the accounts. It's still a lot of money, but if I take multiple losses in a day, I'm still never in that situation where my equity curve dips too much. I know there's probably a lot of traders out there that we'll probably get to that level and be like, I'm going to risk 10K per account, right? So it ends up being like $200,000 or $400,000. And I know Kane did that towards the end of his run as well. But for me, I was just trying to protect what I had already made and just continued showing up and found trades that I was able to scale into. So it may have started with $1,000 worth of risk on that one specific trade, but then if I was able to adjust my stop loss, add another $1,000 of risk, now all of a sudden, if I get stopped out, I'm only losing $1,000 per account. But I now have 1, 2, or 3 positions on. So when it pays me out, I'm getting paid, an
incredible amount.
A large multiple of that initial risk.
It's a beautiful thing, actually, because we shot that yesterday. It won't be out yet, but new channel coming in terms of strategy breakdowns. We shot one with Kyle in terms of the strategy used on these Apex accounts and just generally that Kyle uses. And there was one beautiful thing when it comes to the risk management that you just mentioned, which was in regards to, you won't dynamic size in terms of just risk more on the initial position. As you just said, you'll risk, let's say it's a 1 to 3, just for the risk to reward side of things. So you'll risk the 1. Once that's able to be reduced and you have a scaling opportunity, you're then able to risk another 1. But now that 3 becomes 6. Or that 6 becomes 9. So in that example you just gave, let's say you had 3 positions, it's still only 1 risk, which probably has then been at break even. Then you got 9 reward. Right?
Exactly.
It's phenomenal. Phenomenal, honestly. And it was really insightful to see, because the beautiful thing that I saw when we went through that strategy breakdown, which again you guys will see in the next few weeks, is the simplicity of the strategy. You know, like when a lot of people refer to ICT as complex and complexities, and I think a part of that is, yes, the teaching style, but equally a part of that is people. They're choosing to then sort of take everything and trying to mold all these things
And
together.
they keep adding and keep studying.
But the best ICT traders I've seen are the ones who have simplified, right? They've taken the things that they've wanted to and have resonated with them and have simplified. And one question that someone did ask, I put a little tweet out the other day to ask, like, oh, I'm sitting down with Kyle, any questions, right? Because we'll get on to how you documented the journey in a moment. But a lot of people have been watching the journey. And one question was, like, are you using other concepts outside of ICT?
So I've used what I've learned in the past, but the biggest hurdle that I had to get across with trading was just being what I've already learned. And I actually mentioned it the other day on Twitter. I'm learning more about myself and the world around me, and that gives me a bigger edge than trying to learn all these new trading concepts. Because with trading concepts, there's never going to be one that is like the holy grail that really adds a lot of improvement in your systems.
Yeah.
Because the probability of the trade, regardless if you know Gann or Elliott Wave or RSI, MACD, whatever it is, that next trade that you put on is the same probability as if you didn't know those things, right? So if I go out and learn Elliott Wave, which I don't, tomorrow if I take a long position in NQ, it doesn't change the probability of that trade, right? So